This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and if you recall during yesterday's report, I was speaking about the short-term daily resistance line near that 86 figure, how we might look to enter near the current levels during yesterday's report, placing our stop maybe about 15 pips or so above that 86 figure. And prices did sell off a little bit during yesterday's session. So if you're in this trade, again, I would continue to stay in the trade, again placing that stop, keeping the stop in the same place just above that 86 figure, maybe about the 86.15 area. The next chart is the Aussie Kiwi, and if you recall during I think 2 reports back, I mentioned how I would have a slight bearish bias against the pair as long as it was beneath this former support line, which is now acting as resistance. Let me zoom out a little bit, give you a better view of this line. And now moving forward, I also mentioned during yesterday's report how I was bearish on the pair, but there was a chance for a double bottom to form, and I mentioned how we would like to see prices either exceed that 124 figure or certainly close beneath it, and that did not occur. So right now we do have a short-term rally from that 124 figure. So moving forward on this pair, what I would suggest is I still have the slight bearish bias, but now I would wait to see if prices rebound and hit the former support line from the opposite direction, which should now act as resistance. So this is something we should look for over the next 24 to 48 hours. Prices coming up maybe in the 25.50 area to about 25.75, where a short trade could develop again based on this white previous support line, which should now act as resistance moving forward. The next chart is the Pound Swiss, and both the Pound Swiss and the Euro Swiss exploded during yesterday's session. And in this case, I mentioned this short trade here. Prices did fall a lot during the session 2 days ago, but then obviously we've had this extremely large green candle blowing out anybody who was short the pair. So if you were short, if you did have a short position, obviously on the close above this previous resistance line, I would exit this trade, and right now I would be flat. There's no good risk-reward setup I see on this particular pair, whereas let me go ahead and move to the Euro Swiss now, where the story would be a little bit different. Now this is the Euro Swiss, and I had been waiting for prices to come and test this longer-term resistance line for quite a while. They did do that, but then they exceeded it by about 100 or close to 200 pips, and personally I was stopped out on this trade, 75 pips. I entered just above the 152 figure, stopped out near about 152.75. That was the location of my stop, and that's okay. That's just part of trading, and a 75 pip loss, I can easily handle that and move forward. Now, looking at this chart here, we do have a breakout, obviously, above the previous resistance line. One thing I personally like to avoid is flipping from short trades to long trades, just because, you know, one day is a price action. You know, when that happens, you have to be very careful, especially if you've just been stopped out on a previous trade in the opposite direction. The reason is you tend to get emotional when things like this happen, and you look at the market saying, I want to get back. I want to, you know, I need to get back now and make my money back on the trade that I lost. That's an emotional aspect of trading you want to avoid at all costs. So moving forward with this chart right here, this line is still valid. However, this would be a breakout. So what we want to do now, I would personally switch to a bullish bias and now look for prices to come down and test the former resistance line from the opposite side, where we would now expect it to act as support. But again, I want to give it just maybe about another 24 hours or so, just to make sure I'm entering the trade you know, free of emotions. So over the next 24 to 48 hours, that's a price level we can look for right now near the 152 figure, about 100 pips beneath current levels. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.